All right. Good morning. We had made a video yesterday about about the Thursday trading. We made a review on what the market did that day and how it could have been traded. So if you're interested, go check out that video. So what we've done so far, we've drawn in our overnight highs and lows, these lines here. So today the market's already gone above the overnight high, and then the overnight low is way below down here. Yesterday, the first half of the day was a bear trend day. So there was a spike down that led into a channel, and then the second half of the day ended up being a trading range. Now we're opening within that range of yesterday, so that should increase the chance that today is a trading range day. Also, look at the first bar so far. It's a doji bar. And then the second bar, it was a bull bar, but there's lots of overlap with that first bar. So far, this is also increasing the chance of a trading range day today. Today is Friday. So what's important on Friday is the open of the week and the high and the low of the week. So I'll draw in here the high of the week, which is also the all-time high. So that's gonna be the high of the week. And the low of the week is down below the overnight low. Also, an important price I'm going to draw on is the open of the week. So this yellow is the open of the week. This red down here is the low of the week. And the high of the week is the all-time high way up here. So the close today, the bulls, they want to close it above the open of the week, preferably above the high of the week. And the bears want to do the opposite. They want to close below the low or below the open. So especially as it gets later in the day, these prices will become more important. Looking at the daily chart, what we've had is a bull trend, and now we've had an exhaustive move at the end of this trend. So we've had a large bull body far away from the moving average late in the trend. Anyone that was buying through here, they knew it was trying to get far from the moving average, and then they got one more large bar. This was at least a 40-point bull bar here. So probably a lot of bulls took profits there, and then bears shorted, which is what caused yesterday to be such a large bear bar. Now we're opening within this range, and bears will want to test below yesterday to see if there is sellers below that. They want to see if can they go below that and have it be sold off more, or will there be buyers there? They want in a scenario where the bars look like this, they want to test up as well. But with yesterday being so strongly bearish, and we're so far from the moving average, today probably won't be a strong bull day. Right? I mean, we will probably have legs up, but I would not expect it to get back to the open of yesterday or the high. I think it'll make attempts up, but I don't think it'll get very far. Yeah, yesterday was a fun day to trade. Right, we had the spike down, 4 strong bear bars down. And once you get those full 4 bars, well, first, after you get 3 bars like that, you can draw your measure move in, and that puts you down here. Then once that 4th bar happens, you can move it down. And look where the market went to. It went exactly to where that measure move was, and it created this wick. There's this big tail on the bottom. People knew that it was trying to get down to this level. Buyers got out of their longs, and then sellers got out of their shorts, and then buyers also bought at this level. So it vacuumed down right to that price, and then the selling dried up. And this is evidence that the market and that the participants do look at measured moves like this. It went right down to that price and created that tail on the bottom. So when I was talking about the daily chart, we're looking at today to be a trading range day, and probably legs up are not going to get too far. So if we're expecting that, what are some levels that we could look at the bulls to give up at? Where might they stop buying on the way up? Well, my first thought is a 50% pullback of yesterday. So this is all of yesterday's range. 50% of that puts us at this price. Looking at the bars again, this 3rd bar is another overlapping bar. The first was a doji. The second was a bull body, but it completely overlapped with the first bar. And then the 3rd is a bear bar, but then it's overlapping with the first 2 bars. Now the 4th bar is also it's looking like it's a strong bull body so far, but it's also overlapping. You know, this tail goes down to almost the lows. Going back to the daily chart, we're so far from the moving average, and after bulls gave up like this and bears were able to take so much control, they're probably going to have at least a small second leg down. So I would not expect the bulls to have too much buying today. I would really doubt that they'd be able to get up to the open of yesterday. bulls have a good bull body, closing above this tail, closing above the range we've started in the first 3 bars. Like I said, I don't think the bulls will get very far.
Order submitted.
So I'm going to go ahead and put a limit order with 2 micros at that price. And I'll review the reasons again. Based on the daily chart, we're not expecting today to be a very large bull day. It could have a bull close. So today could have a green bullish body, but we're not expecting it to have too much buying today. We're not expecting it to close back up at this open of yesterday. We're expecting today to either be a trading range day or another bear close. A bullish close is possible, but a bullish trend day it's unlikely. So if the price gets up to the midpoint of yesterday, I think that'd be a good price to get into a short with. I drew this channel in here on the 2000 TIG chart. Not expecting this channel to continue like this, but it's the shape. It's pretty clear that these channel lines are here. We've had 3 or 4 touches on top, and then 2 on bottom. So if I'm going to draw a channel in, that's how I'm going to do it there. Where the price is at now, it's right above yesterday's trading range. So we had this trading range lasted quite a while. Actually it started at about 11 o'clock yesterday. Started about 11:30 yesterday, and then lasted till the end of the day. Now what do we have? Our first 3 bars are trading range bars higher up. And now this is trying to break out above, but we know that most trading range breakouts fail. So most trading range breakouts fail. Then add in our bias that today will not be a big bull day. So I would not want to be a buyer above this bar. Plus, if let's say you're buying above this bar, that's a fairly large bar compared to the other bars in here. It's not the largest, but it's a fairly large bar. It's 9 points. You have to be risking 10 points. Let's say if you bought above and then put your stop below here. So it'd be risking 10 points at the top of a trading range, right? I'd rather not be buying like that. Buying high up in a trading range when we know there's also a bias to the downside on the higher time frame. Bears are trying to form a wedge pattern here. So first bar is the first leg, pullback. Third bar is the second, and then this would be the third push up. Like that. What did we have at the start of yesterday? We had a wedge pattern there too. And what did we have yesterday? We had, good looking bull bars that were closing above previous highs. So this bull bar closed above this high. It pulled back, and then we got a few more good-looking bull bars, with this one closing above the previous highs again, and then it sold off. We had this wedge pattern, and just an observation where we're starting to form a bit of a wedge pattern here too. Now, I'm not expecting a sell-off like this, but the market likes to do things in it likes to copy what is done previously. So sometimes if you look at today, yesterday can be like a roadmap for what it's going to do. So sometimes yesterday will have the same overall look. I don't know if we have an example of that recently. But it'll definitely happen sometimes where one day it'll have certain legs and certain patterns, and it'll have an overall look to the day, and the next day has those same legs and patterns, and the overall look is the same. And that shows you that traders are kind of in the same. It's the same people from the same computers trading that day. So like the overall mood of the market is the same. It has the same participants. Another factor that would help with selling up here is that we know 50% of reversals on the open are reversed. Doesn't matter how strong they are. So even though we're getting 3 good bull bodies, it doesn't matter how strong the move is. That'll 50% of the time it reverses. Plus, opening within yesterday's final range. So I would call like this leg here like the final range, and of course that's part of this larger trading range. But we open within that, and that increases the chance that today would be a trading range day. So if we know today's going to be a trading range day with a bias that has it not being a strong bull trend day, then I think this would be a good price to sell it up here, if the market can even get up here. I hope it gets us in this. I hope it doesn't, create a wedge up here and then reverse back down. I would like to be filled here.
Order filled.
All right, so there we're in it. We'll go for at least 2.5 points. I think I'm going to go for a little bit more. Something that you notice what happened here. The close of this bar and the open of this bar, there's a gap, and this is, this is a true gap. This isn't like the terminology that I use of like on breakouts here. Like this would be like this high and this low would be a gap. What we see here, this is a true gap. I mean, the bar closed here and the next bar opened, not at the same price. I mean, there's distance there. When you watch charts for a while, you'll notice that these gaps tend to close. I tried quantifying one time. I collected a bunch of data on these gaps, and normally it's between most of the time, like 90% of the time, when you see that, it's going to close between like 3 and 15 bars. So usually, and majority of the time, it's less than 5 bars to close that gap. So I'm going to put my limit order down there, and it should be a pretty safe place to get out right there. So once again, we were selling at the 50% pullback of yesterday, and we have a trading range bias for today, or at least a bias that is not a strong bull trend. For the reasons we mentioned, it opened within yesterday's trading range. Yesterday was a strong bear trend day. The daily chart
Target filled.
We got filled there. The daily chart, I'll pull it up again, is far from the moving average, and we had this exhaustive end. So we had this large bull bar. Then what followed was bulls giving up and bears hopping in. So we do not expect today to be strongly bullish. Like, I would not expect it to close back up at this open up here. I would expect either a weak bull day or a weak bear bar or a strong bear bar. I would not expect a strong bull bar. Looking at the 2000 tick chart, we had drew in this channel, broke above the channel. A lot of the time when you see a break above like this, it's going to have a similar breakout below. So that could be beginning here, where we'll see a similar move, about 5 or 6 points or so coming down below this channel somewhere over here. So if it keeps going higher like this, my bias hasn't changed. Um, I'm still expecting it to
Order
not be
submitted.
a strong bull day, and if anything, we're just getting farther from this moving average. So I'll just keep on getting scalps up. I mean, I'll be selling on small scalps on the way up. And my first trade I did 2 micros, and now I'll just do 1 on the way up. I think it's really important to have a bias going into the day. So before your day even starts, you want to examine the daily chart. And when you understand on a higher time frame what the market's wanting to do, that can keep you out of bad trades, or it can give you the confidence to go into good trades. It's like yesterday. I knew that the market had gotten overextended with this on Wednesday's large bull day. Wednesday had this large bull day, and it was happening late in the trend. You can look at the daily chart here. This bull bar is Wednesday. It happened far out from the moving average. It happened late in the bull trend. So we knew that there'd be some bulls taking profits. Then after we got this wedge pattern, bulls tried to go above the high twice, failed here, then failed here. Then they had 4 strong bear bars down. Initially they had, first they had 2 bars, and then they had 3. 3 is when I sold, and then I sold on 3. Then on the 4th bar, I sold above that bar, and I was confident that the selling would work because I knew what the market was doing. It was overextended and it was pulling back some. Bulls were giving up.
Order filled.
And when they're trapped and giving up like that, there's usually a strong move in the other direction. So we're selling here, just going for 2.5 points on that 1 micro. Shouldn't have too many issues with this. We're still on the open, and like we've said, 50% of strong moves on the open reverse. So especially when yesterday was so bearish like that, we'll expect the bears to attempt a second leg down at some point. So yeah, the bulls are buying it right now, but at some point the market's going to want to see if the bears can get it lower again. So we should have no issue selling, scaling in higher here.
Order submitted.
This is also why we trade small when we're doing this type of limit order scalping, because we want to be able to scale in. And most of the time, you're just going to get out from the start. You'll get your profits. When that lower percentage of the time, when it continues to go against you, You need to be able to be comfortable and manage your trade correctly. So if I was trading, you know, I mean, if I was trading my normal size, so if I was doing 5E mini contracts, that'd be $250 a point, and I'd already be, I would have been, I would have been $500 negative right now, and I would also need to be scaling in more higher. I mean, emotionally, that'd be difficult to do, even though I believe in my premise, what's going on. Emotionally, if I'm trading that large, then I might not be able to manage it correctly. And then also, just if the loss is too large, right, then I can't continue the trade. I mean, in theory, it would hit the margin if if it goes against me too much. So we have to trade small, and this keeps the emotion out of it because we're not trading too large, and we can scale in and do what we need. If we need to get out, well, it would be a relatively small loss. So emotionally, that wouldn't hurt us as bad as trading with 5 contracts and adding on with to get to 10. So I really don't have much confidence in this move up here. The Bears are going to get a second leg off of this move down here. After this strong bear day, they are going to have a second attempt. It might not go below the close here, but there's going to be a second attempt down. And I don't think this buying is going to hold up for much longer. So Bull's got another bull body closing above the prior high. So in theory, I mean that does represent strength for the Bulls, but I think this is all a false move. I think this is just an opening move up before the Bears get their second attempt down from this. Selling worked yesterday. The market wants to see if selling will work again today, and it has not yet tried that out. Plus, we're trying to get very far from the moving average. Now, a lot of money has been lost in saying we're starting to get far from the moving average. Uh, Mike A, looks like it's just you and me. Yeah, it's a bit early in the morning. Uh, yeah, it's kind of funny. In the morning, I kind of just am talking to myself until a couple people start showing up. Um, I do pretty much exclusively trade the E mini and the E micro. So my like main position size is 5E minis. So if I'm taking a real high quality trade, I'll do the 5E minis. And if I'm doing limit order scalping like I'm doing here, I'll drop down to a couple micros. So Mike, I'm not sure exactly what time you hopped on. Um, for the first 45 minutes, I've kind of been given an explanation of where the market is. Um, I'll run through that again quickly. So on the daily chart, Wednesday was a large bull body. It was a at least a 40-point bar, and it was occurring late in the trend and far from the moving average. So anyone that was long through here, and then they get this extra 40 points. They see this bar as a gift, so they're going to go ahead and take some profits there. And then the bears know that, so the bears hop in and short around that area, and the bulls are getting out, bears are hopping in. That's what created yesterday's large bearish body. What we did, I'm not sure if you saw the first trade. At the 50% pullback of yesterday, so at 50% of yesterday's range right here, we went ahead and sold that for a scalp. So sold here, and then bought back here. And then my plan, I'll just keep on selling higher because I'm expecting a second leg down to occur. So when yesterday was so strong like that, we would expect that the bears would attempt at some point today to have a second leg down. Now, it doesn't have to be a full right measured move, so leg one, pull back, leg two. I'm not so much needing that to happen. I'm just thinking the bears will take control at some point here, and they'll have a decent move down because the market wants to see if what it did yesterday can work again today. If selling worked yesterday, they want to test if that will work again, and they haven't tested that yet, and they will test that today. We're far from the moving average, and a lot of money has been lost by people saying, "Oh, we're far from the moving average," right? Because it can get farther from the moving average. It can always keep going. It can always get more overbought. But after what happened yesterday, we're not expecting today to be a strong bull trend day. We would expect it to either be a trading range day or be slightly bearish. So I feel secure and taking shorts right higher up. We're starting to get pretty far from the moving average here, and so I feel secure in trading small and taking limit orders and scaling in higher as this goes up, because we're not expecting today to be a big bull trend. We're expecting it to have a at least one strong attempt down at some point today. So if this doesn't get us out here, we'll just continue to take, just add on the way up. I will point out though, the market has not gone below a prior bar in 8 bars now. So the bulls have had some pretty good strength here. So if this goes below, okay, so it just went below there. Usually there'll be buyers below that first low, and then they're buying below that for a scalp. So I'm not gonna do any longs here.
Order canceled.
Awesome. So we got out another scalp there. So I'm not gonna be doing any longs. I'm not gonna be buying as this goes down. I'm only gonna be selling above as it goes higher. 50% of strong moves on the open reverse. So even though this is looking decently strong, we're on the open. 50% of the time, this is going to reverse. It doesn't matter how strong it is. We're far from the moving average. Our premise on the higher time frame is that today will not be a strong bull trend day. So, we have this trading range down here, and now we're selling high up in what could be a larger trading range. So I don't want to be buying up here, but I'm perfectly comfortable continuing to sell higher above bars.
Order submitted.
So I'll just keep on placing shorts above as it goes up. Mike, tell me about yourself. How long have you been trading? What do you like to trade? Got started in COVID. Yeah, I think a lot of people got interested during COVID. Nasdaq is very popular now. So I put on the Nasdaq chart here. Okay, so you do some top step prop firm accounts. So this is the Nasdaq chart. Opened in yesterday's range. So we had a trading range at the end of the day, opened in within that range. and had 4 good bull bars. So really, I mean, my premise isn't going to be any different from what I've been saying on the E-mini. Um, we're still in the open, so we've seen some strength on the part of the bulls, but I would not expect. Uh, there's a decent chance that this is going to reverse, and then once again, larger time frame. We're expecting today to not be a strongly bullish day, so I would trade the same like I would the E-mini. I mean, I would be selling above and trading small, selling above as it goes up. If we get a good short, like a stop order short entries up here, then I'd be interested in that. And I trade with Apex, and I've got my copy trading accounts here. I've not tried Buell Knox or Top Step. So we see the market in opposite terms. How so? Yeah, I mean, yesterday definitely was a pullback. Um, to me, though, what I'm seeing is that I would expect more selling to occur from what happened. So the bulls, they were getting so far from the moving average. They this final bar was large and exhaustive, and I mean yesterday was just a complete give up. And when we're seeing a give up bar like this so far from the moving average, we're expecting at least a little bit more selling to come from that. I don't really have a great example on this chart here. This is not the best example, but it's similar in a way. We had a was trying to get far from the moving average here. This wasn't a large bar. This bar was larger. Um, then we had a bearish day here, and then a pullback, and then a second bearish day followed that. So I'd be expecting something like that to occur. The bears don't have to get all the way down here. I would just expect that today will not just go straight up. It would at some point have a decent leg down. Yeah, I mean the best trades are in the direction of the trend, and first or second entries, and I definitely agree there. Just my premise of what's happening is that this will not be a strong bull trend the whole day like this. Yeah, I mean, next week will probably be more like sellers above stuff and buyers below. It especially after following like these 2 days and us being far from the moving average like this, it's probably going to stall a bit in this area. Good morning, John Doe. John Doe, so far we've been talking about what the premise is for today. We've already taken a couple of scalps here. We actually were shorting during this move up. Looking at the daily chart, we got bulls were moving up here, and then we had this large bullish day, far from the moving average. And then what happened after is the bulls gave up, and the bears had a strong bearish day there. Now what we're expecting to happen here is the bears will have a second leg down off of this. So at some point today, we're expecting the bears will have a decent move down. Now, I'll admit the bulls have really maintained some strength through this. I mean, this is a tight channel here. The lows didn't go below the prior low until here. What this could be here is a final flag. So we have a bull trend up. Then we have this inside bar. This bar is inside this previous one. Then we had two more sideways bars. And when you get inside bars like that and sideways later in the trend, that might be the final flag of it. So then we have one breakout, and then that might be the final breakout up. We're also getting quite far from the moving average here. Now, like I said before, a lot of money's been lost by people saying, "Oh, we're getting far from the moving average." You know, I mean, look at yesterday. We were far from the moving average here, but instead of buying because it's far from the moving average, this is actually the price you want to be selling at. Right? It can stay far from the moving average and get much farther. So that's the reason why we're trading so small. And we wouldn't be doing this unless we had our premise was that today won't be a strong bull day and that there will be more selling happening at some time today.
Order filled.
So what has today done? What has today not done that every day does? Today has not touched the moving average. And every day touches the moving average. You can go back and look at 30 years of charts. You will not see one day that does not touch the moving average. So we opened above. We didn't touch it here. And every day it touches the moving average. Now, once again, right, the context has to be right. But once we start to get higher in a leg like this, farther from the moving average, we know that at some point it's going to touch it. Now, an issue with just being right, like narrow sighted with that is that yes, the moving average is gonna touch the price. It's gonna come back. The price is gonna touch the moving average. But instead of the price going down to the moving average can come up to the price. So using yesterday as an example, price is down here, but instead of the price going up and touching the moving average, it's the moving average that's coming down. So like if you're down here, the price did not come back all the way up to this area up here. It was instead the moving average that came down and touched it. So you need more than just being far from the moving average. That's one reason why something like stochastic and RSI is causes so many beginners so many problems, because they're just basing off of that. But actually, right, if it's overbought, it can actually get more overbought.
Order submitted.
So on the 2000 tick chart, we have a channel drawn in. Now it's starting to get a little bit above this channel. Normally when you see a break above a channel, 75% of the time it goes to the bottom of the channel and tries to break out of the bottom of the channel. I am really surprised by the strength of this move today so far. But this is also why you trade so small. Right, if you're doing limit order scalping like this, you can't go in on your regular full size. You have to trade way smaller, like way smaller than you think. I mean, like honestly 50 times smaller than your normal position size. Because as you scale in, right, then your risk increases. But you want to make sure like the total of those trades, the total risk is less than or the same as what a normal trade would be for you. Like if we had sold here with a normal like 5e mini position size, well, we would be limited in our ability to scale in higher and do what's needed. I'm drawing this in. It's a shorter term trend line there. What I would want to see out of this trend line is that it breaks below. And then normally when you see a break below that, it'll test above the high of the trend before turning down. So I want to watch for the break below that. And then once it goes above that high, then I would look for it to come down to the bottom of the channel. It'd be something similar to what happened here. We have a trend line moving up. Then it broke below that, and then it came up and tested the high of this before trying to go lower. And it did fail to go lower, and then it went higher. Now we have a new trend line up. So when this trend line breaks, after the break, we would expect it to attempt to go above the high of that trend line.
Order filled.
This has definitely been some impressive buying. We see that all the news events for today are already taking place. We had some 8:30 news, and then 10 a.m. news. So no more events for the rest of the day. Today will be an interesting day. Now that the bulls have gotten up this far, it looks like they're going to attempt to get above the uh, high of yesterday. I also wonder what happens once they get there. With today being Friday, even with a strong bull day on Friday, there's a chance that there could be a sell-off at the end. All right, the open of the week is down here, and the bears might let this buying happen all day, and then in the last hour or two, they might want to reduce that bull body on the weekly chart, so they would sell into the close and try to make it as weak of a bull bar as they can. Something to keep in mind, we're still on the open. We're 17 bars into an 80 bar day, and 50% of strong moves on the open reverse. Now, this really has been a lot of very consistent buying through here. So I would not expect today to be a strong bear day. But I've not changed my mind that at some point the bears will take control, at least for for an hour. That's right. That's a good observation. Had yesterday's open is right above. On the Nasdaq, interesting. Yesterday's open is still way up here. So do we see some sellers come in at the open? We could. I think if it's been this strong and this close, I think they'll try to get it even further up to the high. Just out of curiosity, looking at the Bitcoin chart. Bitcoin's been in a channel down. And Bitcoin's at a critical moment, right? It has the moving average right below it. But it also has this channel line coming down. So is it going to continue in this channel, or is it going to fail to go lower and then break out of the channel and head up? So looks like next week we'll decide what Bitcoin will do there. Because if it can't stay above the moving average, then it could be headed lower. Far from the moving average. Looking at this day, that was Wednesday. You can see how it can be far from the moving average, but then the price doesn't go down to the moving average. It's the moving average that moves up. I was looking at the chance of this being a leg one, leg two move. So first leg, pull back, second leg puts it up there. So first bare body in a while. We'll see. Is that enough for the bulls to get out? I think they'd rather wait for a second entry to be getting out. I think some will. Right? I mean, if you bought down here and then you get a bare body this far from moving average, go ahead and take some profits. I think more would get out if there was there needs to be a better pattern, a better second entry for more to get out. I readjusted the channel up here. So now it looks like I think this is a more accurate channel. So now it's not really broken out above that channel. It's still contained within that. So for example, let's say this bar forms like this, and then we get another bare body after that. And I think bulls be more likely to get out below that second bare body. I don't think this bar with this tail below was enough for many bulls to get out. Yeah, people say that people say the E-mini moves slower. So it's kind of whatever your style is, whatever kind of fits your personality and what you like to get out of the chart. I think with the bulls being this close to this area up here, I think this first open of this first bare body is definitely the goal to be at. Whenever there's previously been a strong trend down like that, and then now it's rallying back, the ultimate target is the top of that sell-off. So this bear bar was inside of this bull bar here. That's an inside bar. And the next bar was an outside bar. It went below and above. So the market is looking to get out of this area right here. It's probably going to see increased volatility now, either going above this or going down below it. So Mike, have you taken any trades today? I know you had a bullish premise come into today. Have you been able to get in on any? I only trade the open. Yeah, I mean, that's really it's really a pretty good way to do it. You know, get in and just for the first hour or two, just trade for the first hour or two. I hear that often that people do that. Yeah, I think that's a great way to go about it. If that works for you, you can get your be done in the first couple hours. Have kind of setups that you look for every day. So if you were bullish, so do you use the 5 minute or 1 minute, or do you use a different type of chart? $500 ticks. This is what you would have been looking at. Maybe you were buying above one of these bars here, the moving average, maybe like here or here, somewhere in here. And you'll be like, got a scalp. or maybe somewhere in this move. Yeah, so for me that'd be 925 to 935, kind of in this area. I've been hugging the top of this channel for a while. This is the gold chart. This is the daily chart of gold. Last few weeks, last few months, it's had a handful of strong attempts to go lower, and each of those attempts have failed. Now we've got this good looking bull bar. Leg one, leg two would put that quite a bit higher up here. I think that actually might make sense with the larger economy. I mean, I feel like there's going to be a decent amount of uncertainty over the next 6 months. I mean, we have the markets are at all-time highs. Now, I mean, do they keep on making new all-time highs, or is there a pullback of some sort? There's the election coming up. There's going to be lots of uncertainty with the election. So it might not be so unreasonable to think that gold would get up here over the next 3 months. I think if this bear bar closed like this, I think there'd be some bulls getting out below that. Right, we had this flag here, broke above the flag, and now we're getting a decent bear bar. And in a way, it'd be like a second entry off of here, but this would need to have a decent close. It can't have much of a tail on the bottom. That's a doubling of the range on gold. Puts us at a similar price. And the thing that catches my attention is the bears kept trying to sell it in here, and they kept failing. So eventually they give up, and the bulls take over. So really, I mean, with the election coming up, right? The market's already at the all-time highs. The election's coming up. How certain do we really feel about the next 6 months, year, 2 years? So I'll go ahead and put on.
Order submitted. Order
I'll
filled.
scale in there, and I'll try to just get out, with a couple ticks of. Let's try to get out with a point. This has been a very steep channel. Lots of buying, very consistent. At some point, the bulls get, they get a bit exhausted, and then there's a pullback. I do think that now that we're this close to this high, they're going to try to get that up there. So much of what the market does is all about the Fed and what they do with the rates. I mean, you can almost just throw anything else out the window. I mean, if the Fed says we're going to be lowering rates, then that's very bullish for the market. If they're going to be raising rates, you can almost see it on the faces of the people on the business channels as they're reporting it. I remember when they started raising rates after COVID, and you could just see their face just dropped as they were, and as they had to say, oh, and the Fed has committed to raising rates to fight inflation. I think the energy was lost from their face because they know all of their long positions then, as they're on TV, are getting hammered, and that they need to get off TV and go, adjust their positions. So we've not touched the moving average yet today. Looks like this is going to be the time when it does that. It can easily just go sideways here, and that moving average will catch up. But it looks like this is going to be over the next 30 minutes. That's when it's going to do it. Yeah, he definitely does have an interesting style. Just looking at that initial range on the open, and just trading on that. That's a nice way to do it. It's a nice way to just be done with your day early on. Bull's got another bull body closing above prior high, so still showing signs of strength. see the market still hasn't given in. When you're looking at this leg up and this bit of a channel here, I wonder if we'd be looking at a measure move up like that. That would put us up above yesterday's high. Sometimes that happens. I call that an S move. It maybe you call it. So when you get a spike and then a channel, but instead of that channel just turning into a trading range, it actually gets another breakout above. So spike, channel, but then instead of going sideways or going below, you get another breakout up. The bears have not yet been able to make money selling below bars, but they have been able to make money selling above bars. They're able to sell here, either scalped out on this bar or sold more higher. They're able to sell here, scalped out here. This bull body, they were able to sell the close of that. So now they're able to sell the close of bars and sell above bars to make money, which is unlike what they've been able to do most of today. So now we're looking at this either turning into a trading range where sellers can sell below bars and make money, or I think what's going to happen is it's going to get a leg up like that. Oh yes, Elliott wave theory. I haven't really looked at the details of Elliott wave theory in a long time. I try not to see things as far as like just like naming it a pattern. I try to see it as kind of underlying what's going on. So, for example, when we see this head and shoulders top here, I call it head and shoulders top so that we understand what I'm trying to point out, that there's a left shoulder, head, and a right shoulder. But really, in my mind, I'm not thinking of, oh, it's a head and shoulders top and that's it. I'm looking at this went up to a level here, so there's that there. Then it broke above but failed to go higher, and then Then once it got below this level, it then acted as resistance, and it failed to get above that resistance, and it failed and went lower. So I'll put names on things just to, so that, like, the pattern is so it can describe what the pattern is. But I always like to keep in mind what underlying, like what's actually going on the like what the traders are actually doing that makes that pattern happen. If this bear bar closed like this, there's probably going to be bulls will probably get out of that, get out below that bear bar. We've had enough attempts up now. That's where the bulls might go ahead and give up and get out of their longs if this ends up being a good bear bar. At least for a test back to the moving average. But it has to be a good bear close. It can't have this large tail like that below. I think I think some bulls will get out below this bar. I think they're seeing these multiple attempts up now that are failing. And then if it goes below this bar, I think there would be some sellers below that. I would have traded the gold. That might not be so bad. Is if we're looking for a breakout above, to get to somewhere up in this level, what you could do is buy above this bar, put a stop below the bar, and then go for, looks like be about 3 times your risk. So buy here, stop below here, go for 3 times. So if that breakout does occur, you'll take advantage of that move up, and you'll keep your stop fairly tight. So you'd probably lose that most of the time, but I think your wins would offset your losses by doing that. So we had this bear bar, and we were talking about probably there'd be sellers below it. Or I was thinking at least some bulls would probably be getting out below that bar. So this is the first bar in a while where bears have been able to sell below and make money. So, we're 4 or 5 points below it now. And so this is the first time in a while they've been able to make money. So it's showing we're, transitioning into more of a trading range market here. It's coming down to the moving average.
Target filled.
All right, so we finally got out of that. It's coming down to the moving average. With this being the first time that's come down, there should be
Order filled.
buyers. The first time it touches the moving average like that, it's normally
Target filled.
Okay. So we got our long scalp there pretty quick. So what I did, our shorts finally got profit on the shorts, and then with this being the first time coming below the moving average all day, usually the first time something happens, then there's a small reversal at that time. So anytime you see a first happen, it's showing there's a transition into a new stage. So moving average hasn't been touched all day. Moving average got touched here. There's usually buyers at the moving average. First close below the moving average, there's usually buyers at that first close. So we were able to get a scalp on that close there. And that idea of looking for the first time that something happens, we were looking at it here as well. So bulls, I mean, they had complete control over this the whole way up. Bears, they had control on the way up. However, bears started to be able to sell above bars and make money. So they sold here, and either they scalped out here, or they could sell higher and get out on this pullback. They could sell here and made money. They were able to sell the bull closes and make money. And so then, so all of these, this is showing that the bears are starting to gain some strength. And then on this bar, this bearish bar with the tail below, they were actually able to sell below and make money. So that's showing that we're transitioning out of this bullish phase and into more of a trading range market. XDU USD. Salu, what are your thoughts on XDU? I'm going to take off. I'm not going to have it show the orders anymore. I don't want to clutter up the chart too much. So this is the largest bear bar that we've had all day, right? And that goes along with the theme of first time something happens, and there's a significance to that. So it at least shows that we're leaving a market that is purely bullish now that bears can make money selling. If they can make money selling below bars, right, that's transitioning into a trading range. Now this could keep heading up from here, and like I said, if we're this close to yesterday's high and the all-time high, then I think the market's going to want to get up there. I still hold on to the premise though that we should have around an hour of selling today. Yesterday there was so much give up happening on the part of the bulls. The bulls failed twice to go above the previous day's high, and they gave up, created these four bars, and then it sold off. So I'm still expecting some of that to happen today. Now that, usually a trend doesn't end this abruptly, but this could be the start of that hour here. It's hard to say. We really just need a few more bars to happen in this area. Is it going straight up from here? Could the bears take control and reverse it down, or is it just going to go sideways? We really just need more information. So what would be the next first to happen? Well, the first close below the moving average here. The next first would be for a whole bar to be below the moving average. So this wouldn't be the candidate because part of it is above. So perhaps the next bar might be the first bar below the moving average. And there would likely be buyers with that as well. I'd love to be able to get a stop entry short on this, but normally we would need more. We would need more to end this trend here, right? Like something this strong doesn't normally just end abruptly like this. Like we wouldn't normally just start going straight down from here. we would need some kind of trend reversal. I don't know. So let's say this was our trend up. For the trend to reverse after breaking below this trend line, we would want the market to test up first, and then fail to go higher, and then it would go lower. So that's what really we'd be looking for it to go down first. A claim that could be made is that we have a wedge here, a push here, pull back, second push, and then a third push, or perhaps this is the third push, and then one of these are the first two. But so a wedge end of the trend, and then, like I was saying, I didn't think there would be so many buyers below that. I felt like buyers would get out below that bar, and that's what they did. I think that's why this bar was so big, was because people that had been long for so long, they saw that the bulls didn't have as much control anymore, and they were going to go ahead and take their profits and get out below a bear bar. If this is going to go just straight down from here, a level we can look at, two prices I'll point out. First is the beginning of, we went sideways a bit here, and then we broke out again. So the beginning of the breakout, the open of that bar is right here. That's normally a price that the market wants to get back to. And then we also have the 50% pullback right here. So those are a couple prices below that the market normally wants to reach. It's conflicting because my premise the whole day was that we would have about an hour, at least an hour of a sell-off, and that today wouldn't be that strong of a bull trend. So, you know, I'm wanting to see this sell-off be that hour or two. But also, we've had a strong bull trend today, and the market doesn't normally reverse this quickly. So really, we just need to get more information. Something that's similar that happened like this. What I did, I'll find the day in a moment. I'll show you what I'm thinking first. We had a little sell-off like this, and we had a bar closing similar to how this one is right now, and I shorted below that with the expectation that it would go lower. However, ended up reversing, and then there was a long above the moving average here, and then that's what took us higher. So I was one of the people that got trapped into shorting, and then I didn't get in on the long that actually took us higher. So let me go find that day, because it looks similar to what might be happening now, and I think it'd be worth examining. I don't think it was this far back. If you're ever wondering what the day might do, it's always worth going back and finding a day that looks similar, and then seeing what patterns come out of that. Okay, so here it is. All right, so we had a bull trend up. the bears looked like they had trapped the bulls, and now they were starting to get some selling. And they had this good looking signal bar here, closed below the 200 moving average. So I took that for, I was going to do that for a swing down. I sold here, got stopped out above the bar, and then look, it worked its way above the moving average, and then we had several buy opportunities here, and that's what pushed us up above the high. So I'm just going to take a snip of this. And I'll just kind of have it up over here. You know, it's just an idea. So we have the wedge that's happening here. Could be a similar wedge there. And now look how the bears are below the moving average. The bears are below the moving average. So now we could look for, if the bulls can work their way above the moving average and get some good entries, then I think that'd be a good swing long, right? So buying really above any of these 3 or 4 bars here, and then putting a stop below that bar and going for 2 times your risk to break out above. I think if we get something similar here, that'd be good to try it. Jezebel, I'm glad to see you. Thank you for hopping in the stream. Yes, I've taken several trades today. I'll go ahead and pull up what I've done. It's going to look kind of messy. These are these have all been winners today. The first trade I took, was here. It was at the 50% pullback of yesterday. So here's yesterday's range. We were pulling back into that. We sold here and scalped out here. And then I also sold above this, the high of this move here, on this, a little above this tail there, and then scalped out there. Then as it went up, we have this tail here, so I sold at that high as well. And then I had to scale into that one, so I sold more higher, sold below this bear bar, and then was able to get out with like a point or two of profit. Then with this being the first close, so notice how today, how strongly bullish it's been. Notice how it never went below the moving average. And what does every day do? Every day touches the moving average. Normally when the market does something for the first time, that's significant. So in a bull trend, the first time it goes below the moving average, it's normally bought. So this closed below the moving average, and then we bought it and got a scalp. We bought it here and then scalped out up here. So those are so it's just all been scalps today. I know you kind of hopped in the middle of when I was in the middle of this explanation of what I thought might be happening now. What we're looking at now is this same pattern played out a couple weeks ago. The bulls had a wedge, and it went below the moving average, and then there was a good short below the moving average, but that failed. And this is one I actually took last week. So I sorted here, and I had to I got stopped out above that bar. And then look what happened. Look at these bars here. So the bears tried to go lower, lower again, couldn't, and then the bulls were above the moving average. And then they took that above the high, so they were able to, the bears were trapped here. The bears were trying to sell just like I did, so they were trapped, and then bears gave up through here, and it took it above the high, and then we actually I don't have the whole thing in this picture, but we ended up trending up higher. So compare what's happened here to this. I think it's pretty similar. We even got this, like I was looking at this bar here. This bar could be the same as this bar. All right, so people see this as a follow through. They might be selling that, and we'll have to see if this can get above the moving average and then create some good long entries like this. That might be a good area to swing up and try to get above these highs. And there's targets above. So when we have the high of today, we also have the high of yesterday. This. And then 5,700 is also the big round number above. So these are all targets above. Yeah, I just saw your message there. So yeah, so yeah, so if we can get a good entry above the moving average, then yes, I'm interested in taking a swing up. So this is something I like to do is if I see some sort of pattern that might be forming, I'll go ahead and look at a prior day and look for that pattern, and just look at it and see how it played out. See if bears get trapped, in what way do they get trapped? What sometimes it copies it exactly. Some days are, I don't know, maybe once every like couple months you'll have a day where the prior day had the same exact patterns play out around the same times of the day. And so when that happens, you can just watch what it's doing and just trade based off of that. And it makes sense because the people that are trading like today and trading yesterday and trading 2 weeks ago, it's usually the same people, right? The computers might not have adjusted their algorithms yet. The people that are trading it are still in the same headspace, so you end up with some of the same patterns. So like the pattern that we're in now, so this moment right here, that's probably right here on this. Now, I'm not saying this is going to do exactly as what happens here, but if it continues to move like this, then if we get some entries here, then I think those would be really good entries to take. But it looks like we'll still have a few bars for that to happen. And I'll be back in 5 minutes. So if this is going to go up, I think it's important to watch this lower time frame as well, right? Because we'd like to see the bears try to take it down twice and fail twice. So we could see something like that play out on this lower time frame. So maybe this is the first attempt, and then they might try a second time, and then long might come out of that. So now it looks like we would be somewhere around this point. Even the moving average moved the same. Look how it pretty much going straight up here, and then just sharply turned down right there. And same thing here, consistently up and then sharply turned down right there. So let's say this gets a good bull close. I wouldn't buy above that. Like, well, let's say, I mean, okay, obviously that's not a good body there, but let's say it closed up here on its high and it was a good bull bar. I wouldn't buy that. I would rather wait and get maybe like a second entry, failed second entry, and then the bulls get a bullish second entry. So we have 3 minutes for this bar to form. I'm curious. I kind of want to look at some other markets and just see how they're looking. I was talking about this possible trade on gold. So gold have been trending up, then we've been sideways for a couple months. And look at the bears attempting to go lower. They tried here, 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 here. They keep trying to go lower and they keep failing. Then I was thinking, gold is kind of a marker for certainty and uncertainty. The more uncertainty there is, the more gold price will go up. So what's happening over the next few months? Well, there's the presidential elections. Market's at an all-time high, so there could be some concern maybe that the market might top out for a bit. I don't normally take trades on macroeconomics like political elections, but it's just a bit of a confluence. Like if we're looking for a breakout up of this over the next couple months, then it would make sense that we probably are going into some uncertain times. So if I was going to buy above this bar, I'd probably put my stop below, and then I would need it to be at least 2 times my risk, which would be up here. You know, I wouldn't buy for just it to go up to this high, or if I'm buying here with a stop here, I really wanted my profit to be up here. Bitcoin's at an interesting juncture. This is the daily chart on Bitcoin. It's had this channel down. It's also coming into this moving average, the 200 moving average. It's had a bit of a double bottom at the moving average. And now we're going to have to see which side wins. Does this channel win and this 20 moving average and the bears break out below? Or does this double bottom here hold and then the bulls break out above? And this would be like 2 legs down here. First leg, then a second leg, which comes down to these prices where we're at. So maybe bull trend, couple legs back, and then continuation of the trend up. Or does that fail and now it goes down from here? So it's an important juncture. Jezebel, I saw the picture you sent me about the Bitcoin chart. I'll pull it up in a moment. So this looks pretty similar to what happened here. I don't want this bar to get too large because then I feel like the risk would be too great to you know, I don't want the risk to become too large. So this is the chart Jezebel sent of the Bitcoin daily. Kind of got a broadening channel on the way down. So now it's decision time. If we get a good close, do we buy above this? Then swing up. I'm going to go ahead and load up the Apex funded accounts, load up the copy trader. I don't believe I'm going to buy above this bar. I think I'd rather do one of these smaller follow through bars. I think I'd want to see a couple more tails going lower, trying to the bears attempting to go lower, and then like you see here, they keep trying to go lower, and they just keep on getting bought. So I mean, the options could buy above this bull bar, try to swing up, wait for a smaller entry bar, buy above that. Could look for something on the 2000 tick chart. So look for a failed second entry short, and then get a bull bar, and then buy above that and swing up. So I'll go ahead and move over to the E-mini. So if we're gonna take a trade, I want to be, ready with our normal size, not the micros. It sure does look similar to this. Well, I mean, if it doesn't give me the entry I want, then I miss the trade. I don't like this. I don't think this is not a bad buy here. I just want to see more failure on the part of the bears. It's it's looking very similar to the picture, but and this is why I'm showing this, is that you can look at your day and go find similar days from previous weeks and try to mimic, see if the market is going to mimic what it did before. Because like I said, right, it's the same traders that are doing it. It's recent enough that the computer algorithms are on the same settings. It's kind of like everything is the same that's trading it. So if we get so if this gets a bull body here, I'll have to buy above, and I'll just have to, swallow the fear of getting into it. Let me make sure everything's right on the copy trader. But I do want this to be a good bull body. I don't want it to be a doji bar. So unless it's closing pretty close to its high, then I'm not gonna get in. So bear close, so it made the decision there easy. But now what it could be setting up is a failed second entry short, which is what we were wanting to get. All right, so first entry here, if it goes below here, it'd be second entry. And that'd actually end up being a stronger buy. Like on this, we did have it didn't quite go below, but it did have two attempts down here, and then we went up. So we really haven't had an entry yet, even if you're going to buy above this bull body. It hasn't gone above it yet, and now we have this inside bearish bar, and I don't want to be buying above that. So we haven't actually even had an entry yet. But looking at this previous day, you can tell the mentality of the bears and how they go about getting out once they're trapped. Right? They're selling through here, they're short, they're selling below here, they're selling below here, or they're selling for whatever reason in this area. And then notice bulls start to get above the moving average, starts to be tails below bars, they start to gain this strength, and then at some point the bears just get out, they just give up. And that's what this bar is. It's a give up bar. The bears felt like they no longer had control, the bulls had control, so they just need to get out, and that's what happened there. So far, I would say what we're seeing today on the part of the bulls is weaker than what we were seeing here. I like how this bar closed on its high, and then we had a follow through bar that was bullish, and then another follow through bar, and then another. Versus here, we have this bullish bar, but then the follow through was a bear bar. If I was a bear, I would be more scared on this day here than I would be right here. Yeah, the bulls are definitely trying to keep it above the moving average here. What this could be, so first leg and then second leg. So this could be first leg, second leg. So we could just be at this point now. If this is going to do what this previous day did, we could just be at this point. So then we would still, right? So then these two bars would be what's happening here. But either way, we need more, we just need more bars. I almost would rather this, I would rather this be a bear bar. Yeah, kind of like this. To try to trap in more bears, try to suck in more bears to sell here. So then if it starts going up, then there's more bears, right, that are trapped, and then there'll be more bears having to buy back their shorts. Let me go back and look at that day. Here, so the time it happened. So okay, so I think that's really critical too. Look at the time that happened. It occurred right around 12:45, and then we're right at that time, 12:50 right now. So after this played out, we had 3 more hours of buying. So it was, it was better than even just going for 2 times your risk. Now I'm debating, do I buy above this bar or do I wait for this 5-minute to close? My issue now, this bar has gotten so large. I don't want to be risking so much having to buy above this bar. I almost went ahead and got in above that bar on the 2000 tick. We'll put a limit order
Order
there.
submitted.
So, unfortunately, it might have been too slow on the draw.
Order canceled.
We were surprised a bit by that bar going up there. Of course, we wanted to just play out exactly like it did here. So now I would not be selling above these highs. Look at what we have above. It looks like we have some trapped bears. So we don't want to be selling here when bears are getting out. Bulls are taking control. We have the all-time high above as a magnet. So the market's going to want to try to get up here. So I would not want to be shorting above these highs. I'm going to change that example picture we were looking at. Go ahead and make it this.
Order submitted.
So we'll try to place an order here again on this pullback, see if we can get long here. 2 strong bars up. Should be more buyers up after that. So look at what happened the rest of the day on this example day. Yeah, we do see we have that left shoulder, head, then right shoulder. Yeah, so it just shows how like the bears were going lower, and then like these shoulders are really the bears just failing to go lower. So look at what happened the rest of that day, right? So that we had the breakout, but then you continue to get bull bars that you could buy above, right? There were still entries for the rest of the day.
Order canceled.
On the 2000 tick chart, I'm going back to see what was going on the 2000 tick chart, how they looked. So this is how the 2000 tick chart looked on that day when it was happening. Right? Like, here's that breakout, and then pull back to moving average, bought above bull bars, buy above any of the bull bars, more pullbacks to the moving average, just kept buying. My strategy for most of the day was basically doing the opposite of the trend, right? Like limit order scalping, scaling in. But above this high I would not do that there. I would not be looking to try to sell above. We have trapped bears and there are targets above, so we do not want to be, when we know there's market's likely to get somewhere, we don't want to be trying to bet against it. So what I'm going to do on the micros, I'm going to go ahead and, like, we think it's going up, right? So I'm going to go
Order
ahead
filled.
and just put a small position on the micros. Let's put a stop here. We'll go for, let's see, what target do we want? We'll just go to the all-time high. So I want to take, I just want to take trades with our full position, but if we think it's going higher, then I want to at least have something in the market. So on the scalps, we had made after commissions, it was 65 up to this point. So we're still going to look for longs on our full position, but I wanted to put that micro on just so, all right, I mean, we have a lot of evidence that it's going to go higher. Everyone knows the all-time high is up here. Everyone knows yesterday's high is up here. If it's going to get up there, probably the market's going to do something that will try to trick beginners to not be long up to that. for these two good bars here, we're expecting at least a second leg up. That leg doesn't have to be that strong though. I mean, first leg pullback, second leg, we've already met the minimum requirements for what that second leg has to be. Like I was saying, we missed this first the buy we were trying to get. You know, we missed the buy that happened in here. Could have taken on the 2000 tick chart. Would have already gotten out at 2 times our risk. But the good thing is, if this is going to go up, we have more entries available on the way up. I'm glad we at least got in on a small position. Right, I mean, we're pretty sure it's going up, so all-time highs right above. So at the start of the day, I had the premise that today would not be a strong bull trend day, but that's what today ended up being. So you know, I can admit that I was expecting something like this to be a low probability event. So continuing to get bull bodies. And this close was above these highs. That's good for the bulls. We have gaps. So looking at this high, no pullback has come close to touching that high. Same with this. We have the high on the close on this bar. These pullbacks did not come back to that, so there's gaps there. So I'll admit I'm not too read up on pivots. Let me change it to just daily. If I only had 4K to spend on trading futures, would I go for prop firms or start a live account? Well, I think it'd be best to do neither. I think it'd be best to do just trading, just paper trading, and just doing, just demo and just practice until you can get a bigger account. But I don't think anything too wrong with having like a 4K account and do micros. But you have to make sure you only trade micros, and you're not trading any larger than that. You want to be selective with your trades and trade small. I think that'd be good practice. I wouldn't do, if 4K is the amount that you can put into your futures trading, then I would not, I wouldn't worry about the prop firms. So what I'm trying to figure out now, for some reason it's not even popping up on the chart art, but you're saying not a 3 range on the pivot, but monthly. All right, I think I've got what you have now talking about. So I see there's a level there that it came back to yesterday. And then bounce from there. So from our example from a couple weeks ago, the market trended up the rest of the day. An issue we might have today is that the all-time high is right above, so it's a magnet and the market will get to it. But right, we don't have more magnets above that. So I'm not froze. So once it gets above that, it might start to look. Of course, we could just keep trending up. But what I'm saying is our big magnet, we're going to, that's just 2 points above now. We can put in another measure move for this. Puts us up here. I think we at least want to test 5,700. So I think the market will still has a bit up more up. So the micros kind of trickling up here. We'll just let that ride there. Yeah, on the micros, I mean, right, kind of like looking at the plan we had, like all the targets above, we're pretty sure it's going to go up. So even though I didn't have like a setup, um, I knew we could just trade small and go ahead and hop in and ride that up. I am, we missed the trade that we were eyeballing a trade right here for for 30, 40 minutes. We had the example set up and everything ready to go. That bar kind of surprised me. Obviously, it was still a good buy. I didn't buy. I had my finger on the button on this, and and just didn't pull the trigger. We did try to put in that limit order, but it didn't quite come back and fill it. So we missed that good trade, and that's okay. I mean, there's going to be trades missed. Every day is going to have missed trades. That's just how it is. Market continues to move up, and we can continue to get these gaps. For example, high of this bar broke out. The pullback did not come back to touch that. Same with this high. Pullback didn't touch that. And then we're getting the gaps again here. So high broke out. This pullback. We're coming up against that all-time high right above. Got another bull close, closing above the bar before it. If this becomes a bear ball, I'll just get out of my micro. Otherwise, I'll let it try to get up to the 5700. All right. So we have a new all-time high on the E-mini. 5700 is just a few points away, so we'll probably get up to that. Go ahead and move my micro stop up, just in case the market decides to pull back here. I do think it's going to get to 5700 here, and so we're going to get out just 2 ticks before that 5700. So
Target filled.
All right, so we got out of our micro there. Next target, this measured move. Looks like that could get there fairly easily. Daily chart, I think it's time we start talking about the larger measured move on the daily chart. So I might need to adjust this a tad. So on the daily chart, we have this low and this high. Measure move up. Going to put us right around. I'll add this onto the E-mini chart. So that puts us up here. So that's the measure move up there. So that's another target. It could get there today. We have 2.5 hours left in the day. We've seen lots of strength today. You know, originally my premise going into the day was that today would not be a strong bull trend day. And, you know, I think every day you should go in with a premise, and at some point, usually that premise is going to be right, but some days, you know, you have to agree with yourself that that premise is going to be wrong, and you have to change your mind. You know, the bars in front of you don't lie. Like whatever the market's doing, and that's what the truth is what the bars are doing. So I'm not going to do any more limit order scalping. I don't want to be selling when the trend is this strong, when we're above all-time high like this. We don't know what's going to happen next. It's Friday, and it's getting later in the day now. You know, we're kind of near the end of the middle of the day. So if I'm selling, I don't have time of the rest of the day to scale in higher. All right, so I don't want to be selling and then be stuck in this short position when I don't have enough time to be able to get out before the close of the week. So I'm going to be done on selling above bars. So even though we missed, the big trade of the day, all right, the trade that would have completely changed our numbers for today, it's still been a lot of fun to trade. As long as the market's, whenever the market's moving, you have lots of opportunities. I remember, and I made a video about this in my How to Trade July video. I had this measured move target up here. I was talking about this range. I'd made it during this breakout, and I was talking about how so many traders were complaining about this market here. I'm on Reddit a lot, and I'm kind of reading what the sentiment is among. There's a lot of like beginners and intermediate traders on Reddit. So I was reading about kind of what their sentiment was, and there was a lot of complaints A lot of people that were scared about what was going on because they were all losing, uh, and they were either losing or they were having these slow days where they couldn't take any trades. And what they need to keep in mind is that markets go through cycles, they change. So we had a rough couple weeks here, and then look, the last week or two. So the weeks preceding that, and then this week has been good. Like today, I've had a lot of fun trading yesterday, and then today's been a lot of fun too. So just because you have, you're going to have some slower days or some rough days, or you're going to have days where you have losing trades, but be patient and have hope that if you have a couple bad days, if the market's not good for a couple days, well, then you're going to have a couple of good days. I think this is a real nice measured move target here. One, just based on this move, but also there's this gap at this level. So the high of this bar, then a breakout, and then it never pulled back. So when you get those gaps, you can use those as measure moves as well. So we have two reasons where our measured move target would be up here. I think on a normal day, I would try to trade small, like trade real small and take a limit order sell there, far from the moving average. But like I said, we're above the all-time high. There's more targets above. We don't need to get, it's late in the day. We don't need to get too fancy with it. Coming up to that measured move now. Yeah, today's had some really great buying. Really was not expecting today to be like this. So I guess we need to start looking at a different type of measured move. Leg one, leg two. So first leg, pull back second leg. So that's another target putting us up above. Market's starting to get a bit parabolic. So the bars are starting to get larger as we're getting farther into the trend. It makes me wonder. I mean, I don't want to short up here, but if it just kept going up like this, and let's say in 3 bars we're up at the measured move up here, then I would feel like we would be very overextended if, let's say, in 3 bars it gets up to here. Now, if it does that, I might change my mind to sell there, because we'd already be past these measured move targets, and we'd already be at the big daily measured move target. Yeah, there's no bounce. I mean, it's just gone right through. Went right through the all-time high and yesterday's high, and then it's went right through this measured move. So now it's going up to the next measured move, and then the daily measured move. If it got up here in 3 bars, I think I would go ahead and just with like 1 micro, just short with 1 micro, and try to get like a 5-point scalp. But that's only if it gets up here pretty quickly, because I feel like at that point it'd be so overextended, and it would have already hit all of its targets. if bulls, anyone that's bought, they really don't have a reason to get out yet. Um, I mean, apart from getting out of like the moving average, or maybe you could claim, or I mean, getting out of the measured move, or you can claim that these two bars are getting a bit exhaustive. Right, they're the largest bars later in this trend here. Um, Other than that, there hasn't been a bear bar to get out below. Now this might change that, but up until now, there hasn't been a reason to get out except for coming up to a measured move target. So I mentioned that because it seems like bulls might have more up, even though it's starting to look a bit parabolic. I mean, until they have, like, the bears have had they've had no control yet. They've had no strength. It's kind of like, I mean, during this phase, the bears pretty much had nothing. And then we had to wait until finally they could start making money selling above bars, and then finally they were able to make money selling below bars. I mean, in a way, this looks like it's still in the spike phase. So we get a spike and then expect a channel to come after this. So we got a bear body, but still there's a gap. Open space here. Well, guys, this has been a fun day. Thank you for anyone that's still watching. Um, I think our so 124 was our haul, just trading the micros. It's too bad we missed that one trade we were watching so closely and called everything right on it, but just didn't get the you know didn't get the entry. Missed out on that would have been a full size trade, but that's what happens sometimes. But thank you for watching. We'll be back streaming Monday morning, so I'll see you guys then.